Am I audible now? You
No,
can hear.
very good afternoon to you, sir.
Very
Yes.
good afternoon to you as well, sir.
Yes, sir.
So
Very good afternoon.
just a minute, let me go live and because we are already recording, only issue is going to LinkedIn. So once we go to LinkedIn, there will be more people who will be able to join us. So we are just trying to get on LinkedIn. LinkedIn. Anyways, let us start, and whenever we'll be able to go to LinkedIn, we will go to LinkedIn. But first, let me welcome, and it has been a long due. Almost 3, 4 weeks we have been waiting to catch up with each other.
And, and it is really a privilege to meet you online.
No, actually, I think it was always a privilege for both of us to at least interact, meet, talk, discuss what exactly, we can share ideas, and whenever we can share the ideas. So
Very
it's
true.
mutual, very true. Uh, let me kickstart officially. What exactly in gold loan sector is you think is the biggest problem for any of the players? And what are the things that major players who are operating in the industry should be concerned about, or they should observe?
So the first and foremost thing is the process. There are three things which the company should do it is check on the process. There are three things: process, policy, compliance, and the business. Business comes not the foremost, but the last. See, business always, once the process, policy, and the compliance is right, the business always follows. Because when we start a business or any kind of a business or the bank or maybe any kind of NBFC or any institution wants to do a business of a gold loan lending, they have to be very strict on the process, policy, and compliance, and the business follows. And there are a lot of competitors available. There are biggest competitors, as you know, that Muthoot Finance, Manappuram, and the recently started IFL and uh, Capri Global. Then you have Aditya Birla, and a lot of new NBFCs are coming up in the gold loan vertical. And you know, they have started at the other loan verticals, but they wanted to come in a gold loan vertical. As you know that the gold loan lending, as has surpassed the growth more than the vehicle loan AUM.
Oh,
The, the fastest growing lending proposition which is there is against the ornaments, jewelry. The first was the home loan. In fact, now is the home loan because it has been since the ages, decades, the home loan was the first choice of the any of the borrowers. Next choice is the vehicle because वो कहते हैं ना कि भाई आपका अपना घर होना चाहिए और घर होने के बाद गाड़ी होनी चाहिए. So there should be some commutation. Once you own the house, there should be some kind of uh, commutation uh, thing, maybe a vehicle, maybe car, maybe bike, or maybe any kind of commutation method which you can go from one distance to another distance. So that is a two prime focus, and the next prime focus is the food. Okay. So these are the two things where always it is a family, cultural, environmental, psychological uh, kind of a concept which is imbibed in every person. You see, as far as the Indian is concerned, in any of the states, any of the culture, any of the religion, the first aim should be home. Apna ghar hona. No, that is the one. That is, home loan is the starting where the every lender, bank, NBFC, they come front, and even the government has taken initiative. Let's say Prime Minister Awas Yojana, all these things, the schemes has come and to encourage to take the home loan and then their own house. So next is the vehicle, and third last year till last year, gold loan was the third or third no, top three gold loan, lending business. But now it has surpassed. From this financial year, the gold loan business has surpassed the vehicle loan business. And maybe I forecast that maybe in coming few years, the gold loan business will be the only business. It was the gold loan business earlier was the ignored business. Actually, why? Because it is only for the emergency. It is only for the emergency. If any foreseen circumstances happens, the gold is the number one where it can lend, it can illiquid to the liquid kind of. It will give you the cash immediately. When you go to the sahukar or maybe the pawnbrokers or maybe the jewelers, they will give you the cash immediately. Whereas if you take any kind of a personal borrowing, then it will be difficult. Then they have their own, document checks. Then it will take some time. So that has gold loan business has become in 2 decades. It's become now a top selling uh, business for any institution, and even for a borrower also. It will be easy for to you know uh, carry gold, idle gold into the cash. So these are the things where the concept of the gold loan business has come, and this gold loan business has become lucrative, and it has become an asset to the institution also and for the borrower also. Because once the borrower has given the asset to the institution, it has become the asset for the institution. That is, we call the book size which they maintain. So these are the competitors and concept of the gold loan business oversize. And when you see the CJR of the gold loan business has increased as per the RBI report, and the CRISIL report is 42%,
Yeah,
from the last year.
yeah.
From the last year. And a company is matching that CJR now. So companies maybe who's there in the lending business who wants to start the business, they or who has started the business, so they are matching that CGR. It should not be below that. So that is the thing. Benchmark every institution, lending institution takes care of.
But I think, there is another factor. The another factor is increase in the inflation rate. So if you go for a personal loan, the personal loan limits may not be able to, provide you with the kind of money you need in order to meet the requirements. So now the second alternative that you have available is gold, because you already know personal loan amount is not going to be much. That is again one of,
Okay.
the key ingredient which has played in the uh, role in boosting of this industry. Do you have any other take?
See, personal loan is an unsecured loan. Personal loan is an unsecured loan. Once we uh, comparisonly, it's a personal loan always be a
Traditional, yeah.
traditional, basically always once you formalize the personal loan, then these organized sector, but actually personal loan started from our own family itself.
Yeah.
Because see, family members, okay, you borrow some money and then you return it. Whether you return back or not, that is a different issue. But it is unorganized sector where you can go to any of the rich family where they have the cash out money, and they can borrow the money. But once it has come to the formalized sector, it has taken some time, and there are few checks involved. Nowadays, it is the CRIF or CIBIL or any kind of a credit agency which checks on the KYC documents and the borrowing capacity, and then they uh, you know offer the personal loan to them. So for a when you say compare to the gold loan and the personal loan, gold loan is a easy liquid out, and can be used for anything. Can be used for anything. Personal loan is only for the individual sake of time. And gold loan can be used for the individual, even in fact, the office, I mean, for the business purpose as well. And as a security, when you see the factor between the gold loan, personal loan, and in fact, nowadays the personal loan over the credit card is coming. So these are the secured by the gold collateral. And when you see the approval time for the gold loan, it is 15, hardly 15 minutes to 20, and where personal loan is a 1 week. And credit score is very important, where low credit score in the gold loan can be subsidized and given the loan, and where personal loan requires high. Interest rate is actually it's a low because it's a secured ornament, so it is lower than the personal loan. And also, loan eligibility is the criteria, is a major function in the personal loan basically. Once the repayment capacity or the borrowing capacity defines, then the personal loan will be given to them. It depends on the lender's choice. Even the gold, for the gold loan, it is the fixed, for that it is 75% or 85% in the category of the loans, when the gold loan is concerned. Repayment flexibility is very, very high in terms of gold loan, where personal loan is fixed EMI, where EMI can be bounced, but the gold loan is always, they have to, because it's an emotional asset of the family, the household. And risk is also very low because gold is already pledged. So the customer definitely, at least 90% of the customer will definitely take the loan.
But
So
one,
that is the one.
no, please continue, continue.
Yeah. So speed of approval is fine. And there are other thing which is repayment flexibility is also can be taken into consideration. Yes, sir, please.
Actually, whenever you think of the gold loan and you think of, there is an easy liquidity which is coming for the household, because household knows that, okay, I'm going to take this gold and I'm going to get it converted into liquid cash. It gives them some kind of satisfaction, but the problem, and it also gives them security. The problem is on the side of the lender, because how exactly lender values, because if you look at the traditional jewelry market or the jewelers market in India, uh, something which is 22 carat gold actually turns out to be maybe 15, 16, 18, or 12% gold. And plus then
Mm,
there are a lot of preferences for these stones. So if it is said to be a diamond, but it could be a lab grown diamond which has been sold maybe for 120 rupees a carat, but being sold for 1,20,000 rupees, and that is also part of that ornament. So how do you manage, and how exactly the companies, because most of the NBFCs, what they do is they start gold loan business, and then they exactly have a copybook style of following the bigger players. But when it comes to the valuation, this is where they go wrong, because they do not have that experience, that kind of infrastructure available to exactly value the ornaments. And then they
mm,
depend upon the traditional players, where they end up maybe giving twice or thrice the actual value of the ornament, though even the customer generally doesn't know what exactly is the true value of the ornament. But he just says that, okay, I paid 2 lakh rupees or 20 lakh rupees for this entire set, gold set. And these guys, they go via traditional method, and then later on they realize that the actual value was much less and they have disbursed more. So how,
true.
how we go about doing it, if you could enlighten.
Sir, it is a very good question, sir. Uh, this For a lender perspective, the operational and security always is the first priority, because you know as a lender, it is not to see the loan given against the jewelry LTV, but the objective of the lender is not to give the loan against the jewelry. Let's say 100 grams of net weight of the gold, and they wanted to 75% of the thing. It is not that objective. Objective while lending the loan, gold loan against jewelry, is the how the repayment thing will come, because that is only the profit thing. Okay. And this is a normal. So operational security is the operational risk always the lender has to see. This is the most critical operational risk in the gold lending. See, what happens is that uh, industry, most of the industries relies on the independent test because single test cannot reliably detect the every type of authenticity of the gold. See, there are few things, as you said, there are a lot of mixed kind of in the gold jewelry. There are very authenticated risk are there. Let's say gold plated jewelry, as you said, some low, how to get out. So there are thick gold layer which is on the gold. Then the surface, we then the lender test the surface test, and that indicates the genuine whether genuine gold is there or not. Because the gold they have to only lend on the gold jewelry, not the copper or the any kind of a mix. So lower purity uh, is the uh, lower purity is the issue. How to justify or how to verify or how to check value the jewelry purity and uh, uh, and give the loan to them. There are various checks involved. I'll tell you the two, three things how what is a kind of low purity comes. Let's say 18 karat jewelry represented as a 22 karat jewelry, or 22 karat jewelry represented as a 24 karat uh, 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 jewelry. Even 2 or 3 carat error also uh, gives the more collateral value. Let's say लोन उसको लोन अगर 2-3 कैरेट का भी डिफरेंस है तो पर ग्राम रेट इज per gram rate, if the per gram rate according to become 2, 3, 10,000 as at present, so 10, 11,000, so it is 20,000, 30,000, 50,000 higher than the value. Then
Yeah,
we are giving overvalue.
yeah.
Then the third category is the hollow jewelry with a hidden filler. Let's say copper filling is there, maybe wax or lac filling is there, maybe some kind of internal materials where we have to do deep cutting and then we have to see whether how much gold is there. Then, then you see there are other hallmark manipulations also. There are hallmark manipulation. If it is 18 karat, 22 karat, hallmark is there. Maybe fake BIS hallmarks. The 5 marks, there are 5 marks are there, but 1 mark is not there. So the sometimes it is a manipulation to the lender or the appraiser who appraise it. And if he is not so judgmental and not so uh, so vigilant, then he will fail that. He will give the higher amount. So we have to see the existing mark, 5 marks and hallmarks is very useful indicator for justifying a goal. So these are the three, four things. Once you, if we see, shall I tell you the how do the appraiser checks
Please, please, please,
value?
because I think that is going to be very important for the NBFCs and as well as for the consumers also.
Okay. So uh, there are various checks involved. Valuation involved. How do they appraise it? First, the gold jewelry comes. They do the sound test. They do the chemical test. They do the uh, you know uh, what you call the
Polish.
acid test,
Yeah.
acid test. Then there are 7 tests involved. There are a lot of things. The flexibility test they take care of it. They also check whether let's say a bangle, for example, bangle how much weight it should be. How much weight it should be. Once you touch feel. I even personally I have checked it. Personally, I have experience of testing, valuing the gold. So I know the intensity. It is not to be expressed, but it is to be felt. So there are also a density. We also call it density test. So let's say, and that to be calculated, like what is the weight and the volume. See, gold density is higher, highly densitive, because once you see the gold, it is something like 19.32 gram per centimeter. It should, and copper is lesser than that. Silver is also lesser than that. Most of the, most of, fake happens when the tungsten density is equivalent to a gold density.
Gold density.
Tungsten density is equivalent to a gold density. So most of the the fake or maybe the fraud happens when the tungsten mixes with the gold. So density, then what happens is the once we check the density, then we see that uh, it is a it become misleading. So then we have to test with a touchstone testing. When the stone is there and we rub it and then check it, then check. Then small sample will be rubbed and then on the exact joint part where the tungsten maybe or some kind of a filling or some kind of mixing happens. So advantage is that it is very fast. Touchstone is very fast. We can rub it and then you can see the apply the acid or uh, the chemical and it gives the color. So green color, blue color, white. If there is no color, then it's a gold. So but it is that is also limited. The stone is also a limited one. So it is only it will not detect the internal chorus, ki what happens inside. So there are also few things. Let's say X-ray fluorescence, XRF testing is also there. So that is also with a X-ray also we can check. We can check weight dimension analysis. We can say ki how much if let's say a bangle or a chain, if it is chain is 3 meter, 3 mm thick. So how much will be should be the weight? Then uh, uh, color, color. Color consistency has to be there. Let's say somewhere in a bangle or the see, color, gold color is somewhere else and something else. Nowadays, mm, there is a uh, nail polish, gold color nail polish. There is a very thick gold color nail polish. When you put it on the uh, gold ornaments, it will look similar, but when you check it in a in a very vigilant way, you will be able to see the difference in color. So that is a color consistency has to be there. Solder joint. How many solder joints are there? Then surface where I have told you surface touchstone, hallmarks is there. Manufacturing patterns. Manufacturing patterns is one of the best thing which they have to see ki which jeweler have manufactured, which brand has manufactured. So brand name in the BIS hallmark will be given, and you can test online. You can check BIS mark through BIS mark. You can check which is the jeweler who has manufactured it actually. And there are drill marks where or unusual drill mark is there on the jewelry. These are the suspicious pieces of the thickness which we can uh, do. And there is advanced larger institutions like maybe bigger institution where exporters and all they check with ultrasonic scanners, acoustic testing, the equipments and all things. Magnet testing is one of the testing which we can also test, that is iron, nickel or steel. If we do the magnet iron, it will it when the magnet we apply to iron, nickel and steel reacts with a magnet. So that will respond on the these three you know uh, iron, nickel and steel will respond to the magnet. So we'll
Okay.
be able to know how much it is pure is there. So these are the preliminary screen tests which we can do always with a this thing. Once we do in a practical thing, it will be in detail. But
I understand, especially the cyanide plating. We are simply avoiding the cyanide plating,
one of
electroplating. Yeah.
exactly electroplating and cyanide plating is one of the running fraud which is happening, which they wanted to do a fraud because that is very very I would say the appraiser or the valuer, they should not do with a naked eye, naked hand. No, because there are a lot of chemicals. If it is a fraud, I
Yeah,
always suggest that there should be a one kind of a two pieces of the cloth always should be there within the hand. Once they take it in the tray, the gold jewelry has been taken on the tray, not with hand.
yeah,
Right? It should be in a two cloth of paper where they can, with the paper, they can outer surface, they rub the outer surface with the cloth and then they start checking it, whatever they check. It then it means that whatever the cyanide or whatever the chemical comes, if it is a single appraiser, then it will affect their uh, consciousness on that
yeah,
time.
conscious on health. Yeah, definitely.
Yes.
Because this has really been, becoming one of the concerns, you know,
Exactly.
and
And they if they most of the fraud happens and the theft happens because of this.
agreed.
Because
Very
of
true.
this. So
Very true.
always two pieces of the cloth, which is it's a dusting cloth. It's a dusting cloth. Always dusting cloth is better because that's a roughness is there, not a plain cloth. Dusting cloth always they rub on the or dusting on the jewelry and then they start checking. That is what I advise to the appraiser.
Very true. Since you have lot of experience, you are one of the, experienced campaigners in the NBFC and banking segment, and now you have been running lot of, successful campaigns and lot of experience into gold lending also. So, what would be your advice for new NBFCs who are trying to come into gold loan business? What should they look out for? What should they avoid? What should they do right? When should they enter? When they should try not to enter? What exactly the playbook for the new NBFCs to enter into a gold loan business?
It is a long discussion actually,
But
but
actually, this
yes.
is more relevant because lot of people they may be approaching you, they are approaching me, and this is one question like everybody wants to enter there. Looking at the kind of distribution that has been grown by a lot of big brands and lot of even established player coming in, lot of smaller NBFCs starting their own gold loan, gold lending branch. So it automatically becomes everybody thinks that okay, I need to have a certain piece of this pie, but then this is not something which is easy to cater to. So let us,
Exactly.
discuss with somebody who have lot of experience being into an NBFC bank, being into a banking channel, and now into a gold loan to provide some kind of insight into a playbook. So I'm not losing that opportunity.
Uh, that is, see, initial stages, every lender first thinks of, they have to set the mindset right. Every nascent uh, uh, NBFC who's not in the gold loan, uh, they have to change their mindset of, you know, uh, taking the profit out of it. Hmm. Profit is the definitely one of the concern. Mindset should be always mindset should be a process and compliance and policy oriented. It is not that ki, okay, I will start the gold loan business and I will take this much profit. It is always a benchmark. But it should be priority should be how we can develop a process, how strong your process is, how strong your policy, how strong you are in compliance with a government regulator. Uh, See, that is a one part where every NBFC needs nascent NBFC has to take care of. If it is an existing NBFC, they know all this, but the process and policy and compliance in the gold loan is different, is totally different. Uh, See, there are few things which I would suggest uh, to the gold lending institution uh, is capital adequacy, the foundation for the growth. It's a capital adequacy is the foundation for the growth. It basically it's an amount of equity a lender must uh, hold relative to the risk-weighted assets. It should be how to weight the risk and how to counter the risk that also have to be on a priority. A lender generally actually, any new NBFCs have to maintain their network equity, maybe share capital or retained earnings that can absorb losses. As I said, process policy and compliance. So it is one of the process and policy and the compliance. Equity net worth has to be there. Then borrowed funds. Next is borrowed funds. That is called, we call in the general accounting is debt. So, for example, bank loans or maybe a kind of a corporate debentures or bonds or other borrowings, which has to be used for loan growth. For example, uh, uh, let's say equity, for example, 500, uh, and debt is 2,500 crores borrowing. The total funds available is 3,000 crores. A stronger capital, how to justify the stronger capital? This stronger 3,000 crore is to enable the lender to expand their loan book, borrow at a more attractive rate as a lesser rate from the bank, maintain regulatory competence, and the building the confidence with the banks and investor in future time. Second is cost of funds. As I said, that capital accuracy is the foundation of the growth. Cost of funds is also a key lever, is a key lever for ongoing business. Let's say, for example, nowadays the lending rate is 16 to 18% or maybe 20 on an average, and funding cost is maybe at present is 8% or maybe 8.5%. And when you say the gross interest period would be something like 8%. If the funding cost rise to 10%, for example, 8%, 8 to 10%, the spread, the difference, the spread, the uh, lending rate and the funding cost. The difference is something like 6%, you know. So it may impact the profitability also. So they have to also see the cost of funds into the consideration. Ki how much, what rate they are borrowing from the bank and what rate they are lending from the bank. So 6 to 8% is on an average. Uh, is the spread should be there in any of the PFC. Unless operational efficiency is taken care of. Only the operation efficiency is taken care of. So, uh, larger institutions who are already in the field, they have to maintain their own credit ratings. They have to diversify the funding sources from that. They have to, have a good relationship with a bank, and they definitely have to prove their own asset quality. Then the third major thing is uh, what are the funding? Let's say I have spoken about the cost of funds. Then what is the funding sources where the NBFC can source, and what are the advantage and what are the challenges which the any NBFC faces? See, generally most common it is working capital loans, or maybe the term loans or cash credit, or maybe some kind of a loan against the bonds or debentures. Uh, So if they're working capital or term loans, overdraft facility, the the advantage for the NBFC is the competitive pricing. Let's say they wanted to take a large chunk of the loan, so definitely banks would offer a lesser rate, lesser pricing, and it is basically a white kind of a liquid from the bank, and the banks will give the flexible kind of a repayment, whether maybe in 1 year or 2 years or 3 years. But once we take it and once we refund it in a longer term, will totally depend on the banking relationship. That is a challenge. See, once we stand on the asset, let's say 1 year, 2 years, or 3 years, uh, once we develop the customer base, once we develop the infrastructure, when we develop our own revenue, then the more dependency on the banking relationship, it becomes a habitual kind of it. Ki once our fund is low, then we have to depend when we take the extra loan or maybe top up loan or something like that. So the borrowing limits has to be uh, you know decided uh, that okay, for 1 year, 2 year, 3 year, or maximum 5 years, we take the borrowing limits and we stand on the our own. We stand our own. So there are other various. I said like banking loans is there, then non-convertible debentures. If NBFC is allowed to issue NCDs also, bonds also, they can issue the bonds and take the raise the money from the NCD also. That is also a part of a long-term capital. It is something like a taking loan from the public itself through the NCD. Okay, and give the good rate in NCD. Then if they have a commercial paper, they can always go for it. Or maybe deposits, some deposit against the deposit also they can go for it. Or there is a other uh, factor, other lending model is co-lending model. Co-lending. See, these are if most of the NBFC may not have all these four or five kind of a thing. Let's say they may not issue the NCD or they may not have that kind of a uh, capital structure or cannot fit into that kind of a model. Then co-lending also becomes a funding strategy.
But I think,
Co-lending model.
I'm extremely sorry, but I think co-lending is a better option rather than becoming, overly leveraged. Because what I have observed,
Exactly, sir.
lot of smaller NBFCs, when they come
Yeah.
for being sold or they look for the consultant, to restructure their financing. And when you look at it, even you find surprisingly the promoter themselves on their own assets taking loan and putting into the business and becoming highly leveraged. Because NC, NBFCs, they do not have the assets of their own. Only it is the business book against which they can secure, or against the paper. So
Very true.
promoters, they leverage their own reputation, their own assets, bring in 2 or 300 crore rupees, try to make an order book, and then they end up being overly leveraged. So I think what you are
Yes.
saying is quite correct. But I think there has to be a balance, because somebody who's doing FLDG, somebody who's doing smaller lending, and when they are entering into a gold lending business, it seems it is opening the Pandora's box without looking your own leveraging capacity.
Correct. Correct. You are very true, sir. I am telling the options the NBFCs, the have generalized NBFC for as you said, right, that co-lending model is also a good strategy. I am telling the basically lending options. Whoever which lending option they fit, they can go. But as you said, right, that co-lending model always to be on top because there are benefits also. There are benefits also because
Because
it is
let me now very be honest, because I understand and I have an idea that your experience is definitely going to justify bringing the right mix. So whatever if it is somebody who may be a banker but who doesn't hold the kind of experience that you hold, I understand that okay, there is going to be a kind of a discussion or a maybe conflicting opinion, but I know you are going to balance it. You're going to put it in a systematic manner for the benefit of the users. That is why I've taken the liberty of deliberately infusing, because this is kind of problems that we have been getting as a consulting firm.
yes, sir. Yes, sir. So, as you said, right, the typical structure of the co-lending should be the lender. This should be a lender originates from the gold loan. The partner bank funds a substantial portion of the loan, and let's say, as you said, that FLDG is one of the part. The it could be like the benefits is basically you know uh, the small NBFC or any of the lender they can reduce the balance sheet uses. What I mean for balance sheet uses is, let's say profit balance, they will take a lot of time in balancing their own borrowed funds, how to repay the borrowings. So co-lending is the one of the option where it requires a lower capital consumption. That is one of the benefit, and they give the space or opportunity for a smaller NBFC or nascent NBFC to scale further. And fee income, whatever they service do, they give the customer relationship or a collateral kind of a thing, or maybe a collection, or kind of any fee income from the servicing, maybe processing fees, or maybe some other cross-selling of the products. So that is always there, a fee income for that co-lending. Uh, but the challenges is there, sir. So coordination is a challenge. Coordination is the challenge because uh, we coordinate with a partner institution, or how we share the operational compliance responsibilities. Let's say, as we take uh, every staff, we take on a, let's say, a person, an individual. An individual has the own responsibility, own kind of ownership, and other person has the own kind of ownership. When together they are working, their responsibilities are defined and their operations are defined. As an employee, it's a KRA responsibility area. Yeah, but as per the institution is concerned, the operational and compliances responsibility we have to share, because whatever we do the business model will be understandable for the third party. That is one challenge every NBFC faces after 3 years or 4 years. That is, whatever we do the method, they know the same. So the shared kind of operational compliance responsibilities are always shared. So that is the thing will affects the decision maker of a founder or co-founder. So that is one of the challenges which we can face in co-lending model, because FLDC is governed. FLDC is governed and monitored by whoever gives it, whoever issued the FLDG. So it is governed. Yes, sir. So hope I am able to
No, you have been
clarify
able
it.
to. No, you
I
have been
have
able
tried
to give.
myself.
Like, you have been able to give a lot of valuable insights. But one thing which you will suggest to NBFCs and the gold companies, that what should they improve and how exactly they should, align more with the customer expectations, especially high net worth customers and maybe the customers who are really premium customers, or they need to segment the gold lending product altogether. Any kind of new suggestions, new innovations that are needed by the industry, by the players, in order to make themselves better, or how do you see the industry is going to change, or industry should be changing in a time to come? Because I don't think I'm going to find any other person better than you to answer this question.
Can you repeat the question, sir?
Gee, I'm asking that any suggestions for the industry, maybe the NBFC players, maybe the current players, to improve, this particular lending operations, how they can make them better. Any kind of, suggestions that you will have, that how exactly, they can uh, segment the product, they can bring new product, or they can differentiate the product, maybe according to the customer type, customer income, or maybe bring in new kind of services in order to make this industry more global benchmark ready.
Yes, yes. Sir, as you said that this is totally when we consider a brick and mortar model, for the any competitors, they have their own outreach of opening the branches and branches franchise and reach to the rural or maybe a higher segment level. The niche uh, level is always be there. Once you say that it's a HNI client or a higher ultra HNI client, so it becomes prudent for gold lending business to the HNI client. See, now it has become a traditional business. Now the gold loan become has become a traditional business. We have to do something out of it. Let's say niche market. So uh, in the gold loan business or any of the gold loan business, speed is the biggest competitor. Speed, speed in the terms of customer service or operational service, or that local trust which we have. flexible kind of a product design we should have. Then superior turnaround and should be there, turnaround in the TAT of the giving loan. Technology, technology is one of the advantage. So what I feel is for ultra HNI customer, it should be doorstep gold loan for them. Doorstep gold loan is one of the gold loan where the good the good HNI customers, uh, they prefer they because they more prefer privacy. They more prefer privacy. So they prefer that in spite of a traditional gold loan business, there should be a kind of a AI automation. AI automation where the HNI needs faster approval rate, faster liquidity, faster appraisal, and uh, and their uh, to fulfill their own needs. Let's say once we say the digital servicing, um, the why this lender the uh, 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 continue to win is because of the operational excellence. As I said, that normal customer category and HNI and UHNI category are different. The still there is a, a scope where we can get HNI client to the doorstep gold loan lending business because then and there we'll do the expert gold loan valuation, maybe slighter lower interest with a lower interest and the processing fees. And this process KYC and document faster, and maybe the automated loan origination then and there. Then and there we'll do the policy checks. Then and there we'll do the any kind of detection, any kind of fraud anomalies, or maybe the uh, you know uh, what you call uh, to uh, do the good customer experiences with their own family members or references. So these are the one of the competitive advantage which we should get, or any niche NBFC should get into it. So uh, totally it should be a come digital come uh, professional kind of a lending. What HNI looks at here is that how valuable his gold is. How valuable his gold is. Let's say he needs privacy. They cannot go to a branch where, taking the gold to the branch and, wait for 2 hours or 3 hours or 4 hours uh, because his time is very important because he's a businessman. And um, so time is the value for him. So we, as a niche lender, so we have to understand we have to value their time, and we have to act upon. So that is where the niche strategy comes into the picture. Hope I am able to
No, you have been able to
give
because
the
you are one of the visionaries, and the kind of ideas you are asking to bring AI, you are asking to bring home delivery, you are asking to bring the entire process to be digitalized, entire process to be technologically enabled. I think this is all visionary ideas where you are somebody who has been trying to make sure that the industry changes with time, it changes to to the requirement of the time. And I think that is something we need people like this in all industries to make sure that okay, industry is not stagnant, it is evolving, it is continuously taking shape towards the what exactly customers needs. And especially when we are talking about high net worth investors, or maybe people who have coming from the traditional background. So I think your ideas are really revolutionary, and they're really appreciated, they're really great. Now coming to
yes, sir.
people who are looking for borrowing against the gold, what would be your advice to them? What should they look at? With whom they should work? What exactly are the things they should ask from the companies when they are, taking their gold for the borrowing. So for the customers, what exactly are your suggestions? What exactly are the things that you will request them? That, okay, this is what you need to ask, this is what you need to verify, this is what you need to confirm from the company with whom you are going to, borrow the money.
See, that as an individual, if they take the gold ornaments to the any of the gold loan lender, uh, see, first they have to see that how much, what kind of the amount or loan amount they have to see, and what is the whether they are whether the individual has the 22 karat gold or not, or correct gold or uh, once they go, there are three things they have to check their own self, that they have to decide. They have to see what exact of the amount they require, what is the security they have in terms of the gold jewelry first, before entering into any of the lender. They should go into the lender and they have to ask very few. This is a simple process. One thing is the uh, कि how much they will get, the what is the loan to value they have to get it, or how much value they will get it. It's a general question any individual asks. What is the maximum loan to value? See, interest rate is also one of the part, but interest rate, whoever wants to keep, see, interest rate is also one of the factor, and the amount is also one of the factor. As an individual, there are two things they will look into. Okay, how much maximum amount I'll get out of my jewelry, and what will be the less interest rate what I'll be able to get it. So they have to see that what is the best option they are giving. They have to check the options available with the lender. If if the the maybe what are the kind of offers they give, they have to check whether any offer they are having it or not, and out of out of gross weight, how much is the net weight they are taking. They have to check if the lender is whatever the loan they are giving, the same amount is mentioned in the pledge form or not. They have to check before they have to check whether the my whatever the promises or whatever the explanation or whatever the schemes they are telling, whether this is correct or not, whether these schemes are beneficial for or not. After they before giving the gold to this, they have to check all these things parameters, and then they have to give the gold for the checking, assuming that the gold ornaments is purity is justified and correct. Then they have to see ki how much value they will be able to get it, what kind of offers they have, and then they have to see ki whether it is meeting to the criteria, or and they have to request to the lender saying that this much I require it, whether it will be possible or not. Then lender may advise or suggest, because they are the lender. They will see how much, if there is more requirement of the gold ornaments, they will ask you the more requirement of gold ornaments to fulfill your purpose or the needs. So this is the three, four parameters they have to look into it. And after that, after the loan disbursement, they have to check the pledge form item wise. Item wise, they are the same gold is there on the pledge form or not. The item is there or not. The gross weight, the net weight, the amount which is mentioned or not, the EMI, what is the interest rate which is mentioned. They have to check all this thing. So it is a pure, simple kind of a loan procedure. So the customer has to keep the pledge form in their own custody safely, so that once they go back to take the gold, they have to produce the same pledge form, and they have to take the gold in the same manner, which same manner where, similar to the initial time when they at the time of the pledge. So this is as per the individual, uh, you know, perspective. Once they go to the lender. One more thing also, the individual, uh, the most of the lenders they show that what is a gross weight, net weight, they get confirmation from the individual. So always you have to individual have to take the confirmation while taking the weight on the weighing machine and the net weight what they are doing it on the paper. And they the same thing, same information should be in the pledge form. So that is what the individual has to check before uh, going to any of the gold loan. Yes.
Great. So last question before we call it off. The increase in the prices of gold. Companies look at their books and they find, okay, AU is increasing, but when it comes to take new gold in, and then it is altogether a different ball game. That okay, now I'm getting the lesser gold and I'm disbursing more. So what do you think is going to be the impact, and how the companies see and how it could be managed, or how the bigger players are managing it?
You're saying the effect of the gold prices.
The gold prices on AUM and as well as on the lending practices, because it really has an impact on your balance sheet without any efforts. It is not organic, because if we say okay, it is it from process wise it is organic because prices are increasing, but then it is not from the top line. It is automatically having an impacting your balance sheet. So what is your take on how you think that it is being managed, or how it should be managed in a proper manner?
uh, Sir, there is one is the LTV, loan to value. Hmm? Loan to value as per the current RBI guidelines. Uh, so there are a lot of prices changes and definitely the volatility is always there. Uh, the lender has to be very, you know, uh, see 85% is the maximum up to the limit. The lender has to, very conservative in terms of LTV while originating the loan. It means that if the RBI has given the 85% LTV percent, let's say out of 100, 85% we can fund. So it is up to 85%. It depends on the lender that how they are conservative in LTV, loan to value. Let's say, for example, gold value is 1 lakh and maximum permitted LTV is 85%. The maximum loan amount is around 85,000 rupees. Okay. So maximum loan amount is 85,000 rupees. How the lender will be able to, uh, you know, counterfeit the market volatility when the prices decreases. Prices increases, not a issue. Prices decreases is the issue where it will impact the revenue. Then the lender what should they should do is they should be very conservative in LTV. It is RBI said 85%. But when we see the loan value with the interest should be 85%. I mean, you're getting my point, sir.
Yeah,
See,
I'm
loan value originating should be around 70, on an average should be
that's
70%,
yeah.
and and interest should be something indicated. So it should be conservative LTV where they can counterfeit the marginal amount. We call it a MTM. So margin to mark to margin.
Not too
Whatever
much.
the gold loan, yes. So that is MTM. So lower LTV always is a beneficial where it reduces the credit risk. It also improves the recovery process, also strengthen the financial stability of any of the company. But only thing is it affects on AUM. Not every time it's a because you see the RBI, the regulatory is very smart and descriptive, and it is see it is a three category. Let's say 2.5 lakhs, any of the lender can give 85%. 2.5 to 5 it gives 80%, and more than 5 it is 75%. See how is it the RBI guidelines has mitigated the risk for the higher value for the higher value. So uh, the thing is, a smaller average loan sizes would not much affect the AUM, but loan, if it is smaller sizes value is huge, maybe 70 to 75%, then it may affect the book size of the uh, company. Or lower interest income also will be there because we are giving less LTV. Okay, so that is that it then it may if it is a lower LTV, it may uh, tell the message to the customer that if his needs are not fulfilled with a low LTV, which a loan is not a lender is not giving, then he may go to other scope of other company or other bank to fulfill their uh, needs where the gap is there. Hope I am able to get it, sir. Let's say, for example, his requirement is 1 lakh and lesser LTV mitigate the risk. A lender mitigate the risk and gives the lesser LTV. He gives roughly around 50,000 rupees or 60,000 rupees. But the customer requires more LTV, maybe 25,000 extra. But for 25,000, or he will search other lending opportunity available in the market. So we may lose the customer or we may not satisfy the customer in that case. So we have to see case to case wise what exactly is the need. We have to understand the need. We have to see the profiling of the customer, saying that what exact business is doing. So accordingly, we have to, if it is a HNI customer, we have to definitely look into the consideration what exactly his needs is and what his profile is, so that he may not go to other lender to cover the gap of the loan. So we may lose the customer in that type and we may not satisfy. In that case, we have to satisfy the customer with a higher LTV.
So to
So
simplify, it is, principal plus interest has to cover the risk, because you cannot go
yes,
beyond 75%, because 85
yes,
is the benchmark. So let us assume we are keeping 10% buffer. So principal plus interest, keep it 75% to 80%, and then 5% is for the adjustment of the value in case if the gold value goes down. So
exactly,
at
sir.
least you have been
This
able
this
to
is what
you have been able to cater
it
and satisfy to the customers. Anyways, it was a pleasure
exactly, sir.
having you. It was a fun-filled 1 hour. I don't know where exactly the time has gone. Again, pleasure connecting with you. I hope most of the people who are going to look at our video, the people who are going to look at this podcast, with the people on the LinkedIn who may have looked, they may have enjoyed, they may have gained a lot of insights from your experience, because you are such a big influencer, mentor, lot of experience into NBFCs and banking system. I think I would have never got anybody better than you to talk about gold lending and the NBFCs and other thing. So it was really a pleasure. Really great having you here. Thanks for your time. Really appreciate it, and looking forward to have you maybe for another session soon.
Thank you very much, sir. This is a very enthralling uh, message about me from your respected Vivek sir. It is a great privilege to discuss with you on board on this thing, and it is I find that I really find that very satisfactory, and hope our listeners would be benefited and. Uh, would be benefited and they can be at least uh, have a roadmap uh, going forward.
Very true. So it is
And
mutual. It is mutual. It is always mutual. The kind of respect that we share with each other, it is always mutual, and the pleasure talking to you any given point of time. And I'm quite sure that everybody who's going to watch this podcast, everybody who's going to listen to us, they definitely are going to get benefited from your insights, your knowledge that you have shared, the immense knowledge that you have shared. Pleasure having you here. I'm not going to keep you on the Sunday. So
yes, sir.
thank you. Pleasure having you. Have a great day
Sir,
ahead,
really
sir.
pleasure. Yes, sir. Yes,
Thank you.
yes, sir.
Bye bye.
Same here, sir. Thank you very much. Thank you very much, sir.
Thank you.
Have a
Bye,
great
sir.
day.
Bye, sir. You too. Bye,
Bye,
sir.
sir.